But there's also other options for BDCs. You could also look at, for example, a baby bond. That is an exchange traded debt or a note which the BDC issues. Now, the BDCs can use leverage, and in fact, most BDCs do use leverage. Now, the question is, of course, how much leverage do they use, and is it possible that they're using too much leverage? In a very simple sense, though, they are restricted from taking on too much leverage. So, yes, the very acts and regulations which control the establishment and management of the BDCs also restrict the amount of leverage that they can actually use. Now, what this means is that if this company issues a preferred stock or a bond or a baby bond, there's a limit to how much they can issue. There's a limit to how much debt they can take on. There's a limit then, or some brakes on how much trouble they can get into by taking on too much debt. Now, that also means that they're much more likely to be in a position to be able to repay that debt, perhaps in another company, without those controls, without those restrictions in place. Now, as a consequence, then, the baby bonds of these BDCs, they'll often tend to, in my mind, they'll often tend to be relatively safe and secure investments. Now, a baby bond is essentially the same as a bond. It is debt that the company takes on. And a baby bond is, though, exchange traded debt. It's debt on the stock exchange. It's not a traditional bond, say, with a $1,000 par value. Instead, many baby bonds will trade at a par value of, say, $25. Sometimes 50, sometimes 100, but a lot of the times we will see $25. Now, with the BDC as well, at the moment, most of those bonds are only going to go out several years into the future. And so I'm not stuck holding this bond for a long time. I'm holding it for a short period of time because the companies are limited to the amount of debt that they can issue. It also means that I'm more likely to get that money back. They're less likely to run into challenges, even in tough economic circumstances. They can simply begin to eliminate those common dividends, but they'll still need to repay the money on bonds or baby bonds. Now, the baby bond itself has a par value of, say, $25. It is exchange traded. That means you can buy it very easily through your regular broker. They'll be connected to the main BDC. They'll often have a very similar ticker symbol as well. And yes, the prices do fluctuate. They don't stay at that par value of 25. They can go up, they can go down. Now, that also means that even though it may have been issued for, say, 5%, if the price goes down, the amount that the baby bond pays will remain constant, effectively giving you a better yield on your investment. And of course, at the end of that term, at the maturity date, you get your initial capital back as well, $25 per share of that baby bond. Now, in my mind, then, the baby bonds are a nice supplement to common stocks. They provide stability. They don't have the wild price swings that we will sometimes see with common stock, and they can provide steady, stable income. Now, most baby bonds, though, will pay on a quarterly basis, whereas you can find many nice companies and many BDCs also that will pay on a monthly basis. So the baby bond payments may be a little bit less regular, but I do know they're coming. And of course, as well, consult with a tax professional to understand the implications for you in your circumstances of this different type of income and how it might be taxed. But bonds and baby bonds and preferred stock, it does give a little bit more stability in the portfolio value. It allows me to have a little bit more safety and security. I'm not going to lose my mind. I'm not going to be worried if the market goes into a situation where prices of stocks and prices of indices changes very rapidly. The BDC baby bonds are going to be relatively steady, relatively stable. And for me, as an investor, that peace of mind, that ability to sleep well at night is very important to me. And so, yes, the baby bond yields are not as high as the common stock, common dividends, but they do come with that sleep well factor. And so when I look at my portfolio, I tend to have some BDC baby bonds as well as some BDC common equity with those lovely dividends coming in. Okay, now when I am looking for a baby bond, one of the first websites I like to turn to when I'm getting more information is quantumonline.com, URL in the messages and video description below. Now, it does a couple of key things here. Number one, it gives me a price chart and I can zoom in on that, which is nice, but not particularly useful in terms of what I'm looking for. What it does do is it tells me the current dividend yield here. Now, this is from MFA Financial. It's a 9% senior notes due in 2029. So the coupon rate is 9%, but the actual dividend yield, because of the slightly elevated price over the par issue price of $25, is 25.38, giving the current dividend yield that we see. Scrolling down, there's quite a bit of details here as well that is useful for us. So interest distributions are 9% to be paid quarterly, so that's useful to know. And it's got the dates there. Now we can also see the distribution dates here as well. Note here, distributions paid are not eligible for the preferential 15 to 20% tax rate on dividends. They're not eligible for the dividend received deduction for corporate holders. So very useful for US-based investors to know these details as well. The security is not rated by Moody's or S&P, the major rating agencies, but it has been rated as BB minus by Egan-Jones Ratings. Look, Egan-Jones is not my favorite ratings agency, and so I don't worry too much about that, and I'll explain a bit more about that later. And so we can see the stock exchange here. We can link through to the NYSE, the coupon rate, 9%, to the call price, liquidation preference, $25. So I get my $25 back for each unit that I've bought. And of course, the call date a couple of years from now, and then the maturity date in 2029. And then further details down here as well about MFA Financial, and some more details here about the MFA Financial Company, all of which can be quite useful. Now, there's unfortunately no, I think, excellent site that does everything, at least none that I've found. So I like this site. It's very specific to information about baby bonds. That's how I use it, but also it is very useful for the preferred shares as well. And it gives us all these other information and details here about the details here in terms of, is it a cumulative payment, etc., etc. So there's a lot of information here that if you get into baby bonds or preferred shares, I think you'll find it really useful. And best of all, in my mind, this is free. Now, this is one bond, baby bond, that I have a small position in. So the ticker symbol is MFAO. And so that's one that I have a position in. Another related BDC baby bond is SAS. Now, you'll see here it's just pulled up the chart, and that's not what I want. So I'm just going to search for the ticker symbol here. So this is from Saratoga Investment Corp, and it's an 8.5% note due in 2028. And we can see the long-term chart here. And this is what we expect to see, is we expect to see fluctuations around this $25 level. Been trading a little bit over lately, and at the moment the dividend yield is a nice 8.44%. And again, details here, not rated by Moody's and S&P, but a BB plus, so slightly better than MFAO, a slightly lower coupon rate and coupon amount there, and the distribution dates are rated or listed there as well. And of course, we've got a call date and a maturity date there as well. And again, scrolling down, a little bit more detail about what's going on, who the company is, and then some financial details for the company. Now, the reason that I do like BDC, or Business Development Company Baby Bonds, is this. It has elected to be treated as a business development company under the Investment Company Act of 1940. Now, I will go into more details about this at a later date, but what this means is the company has a very strict and very controlled limit on the amount of debt they can use. Now, this is good for me when I'm lending the company money by buying these notes. It means that they're not going to have a deleveraging situation where they're going to see a precipitous, very massive and sudden price drop. They're limited in their loans or the amount of money that they can borrow. So there's only so many notes that they can write. And they're also not going to be in a race to create too many of these bonds or these investment notes either. And so there's the controls on the amount of debt that they can issue means that in my mind, it's also relatively low risk, and there's also a lot of mechanisms they can use to manage their debt levels if they were hitting some troubles or some troubling times. There's different mechanisms they can use to manage through that situation, all of which, in my mind, makes this a slightly better or safer risk than an unsecured bond, baby bond from another company. So the business development companies constrained or controlled in this way, and this doesn't apply to all companies and all bonds. So, for example, an MREIT or a mortgage REIT or real estate investment trust, they don't have this treatment under the Investment Company Act of 1940, and so they can actually issue more debt and take on more debt and be more highly leveraged. And as a consequence, in my mind, they're often slightly more risky because of that. Now, what this means is ultimately, even though the security is not rated by Moody's and S&P, I still have some confidence because they fall under this Investment Company Act of 1940. I have more confidence than I would have otherwise that this is going to be a relatively safe investment here. Now, in terms of the question, where do we go to get more information about business development companies? One of my favorite websites is this Business Development Company Universe website. Now, this has a lot of data and information that's not available in other locations. And best of all, my friends, this is free that you can just pull it up on the internet. It's easy to find, and it's from this website, CEF, a closed end fund, data.com. So cefdata.com/BDC. Details in the video down below. Now, it's a really cool website in my mind. So it lists all the tickers here for BDCs where you can search. And some of the key points here is it not only lists the net asset value per share as well as the market price per share. Now we can immediately see here, for example, that the market price for Ares Capital is 21.57. The net asset value of 19.53 is lower. And so we can see here, it's already done the calculation for us. It is trading at a premium. Market yield of 8.9, the leverage amount. Other details that I love here is the percentage of the portfolio that's made up of debt, the percentage of variable debt, the percentage that is either first or second lien loans, which in terms of debt is more secure and safer, net asset value, total returns, year to date, 1 year, and this is my favorite column here, the net asset value total returns over 3 years, which is really useful. Now, scrolling out as well, we also have the expense ratio. Not too worried about that. And they're all within spitting distance, really, of each other, and the IPO date. Now, if I wanted more information, I can click on one of these companies and it will pop open the details for that company. So it's taking me here to the website. And if I wanted more details about what's going on in the heart of this company, within the same company CEF data web pages, it will pop open this. Now, this is a fabulous page here as well. Now, this is one of my favorite pages and views here, and I'm going to take these off here. Now, one of the beautiful things about this website is it does plot the net asset value, or the value of the assets held by the company. And this is similar to book value. It's reported on a quarterly basis, which is why this sort of step change, and you see it's move across then up and move across then up a bit more. Now, the net asset value, I want to see a company growing this net asset value over time. Now, as well as that, most of these really good companies like Ares Capital will often trade at a premium as it does now, but if we look back, there's also times where you can buy it when the blue line is below this red net asset value line, and that's usually a really great time to get into this company. As we scroll down as well, there's also a lot of other information here, which is really useful if you're into BDC investing. And again, a lot of this information you can't get easily from other sources, let alone the fact that this is for free, which is just so wonderful. So, for example, distribution data, quite useful to see here. We've got, for example, some discount data here about how common or how big those discounts have been in the past. But as we scroll down, I think we get into some really interesting information here as well, such as the earnings, such as the performance, such as the overall portfolio. And then when we get to these pie charts, this is a beautiful thing here. You can actually see their exposure to different industries. And then in this pie chart, the asset exposure. So you can see here 46% in first to senior secured loans, another 18.7% in second lien or senior subordinated loans, equity about 10%, preferred stock 10%, common stock 9%, and unsecured or other loans here also showing up on this pie chart as well. So this is a really useful website. It can take a little bit of time because it's not all collated in the easiest or best way for us as an investor to do our research. But the beautiful thing is that this is free for us to access. Now, for me, when I look at this data and it's free, it's a huge amount of really valuable data. And if you begin to couple that with, for example, quantumonline.com, this freely available data, there is a lot of information here that's going to be incredibly useful for investors looking for higher yields, whether or not it's from the common stock of the business development company, which we get details on here, or whether or not we then go away and we look at the baby bonds or the notes issued by these BDCs, and we can look them up on Quantum Online and get a better perspective here of what the note entails and what an investment in this note may entail. Now, look, if this is helpful for you, please do hit the like button and leave me a comment down below about whether or not you've seen these websites before and whether or not after you look at them, are these useful websites for you to bookmark. And do also, these are actual investments that I do hold here in Saratoga and MFAO as well. So they're small parts of my portfolio. And I'm holding them primarily for the income, the steady income that they do provide at a fairly high distribution rate, as well as a security where it is almost, in my mind, very unlikely that they won't be able to pay these coupons, distributions to me. And I'm very certain that I'm going to get the money back at the end as well from this investment. So I do have a portion of my portfolio tied up in these baby bonds. And of course, if you know any more great baby bonds, do let me know and stay tuned because we're going to cover off some more of these baby bonds with juicy distribution and dividend yields as well. And over time, I'm going to go through more of the business development companies and explain how to find a really good option and a good fit for you that will help you to propel your wealth into the future. So, my friends, let's get investing.